You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 11th day of April, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is for 2 hours. That's from 9:30 a.m. to 11:30 a.m. Eastern. That particular broadcast is reserved for members only and those who are taking their 1-week free trial. If you've never taken your 1-week free trial, go to mytradingiq.com, and right there at the top of the page, you'll see the button that says free trial. We try to make things simple. Now, after the live training room closes at 11:30 a.m. Eastern, we take a 30-minute break. And then we come back at 12 noon Eastern for this afternoon broadcast, which is different than the morning broadcast. This broadcast is open to the public. That's anybody, anywhere on planet Earth with an internet-connected device. There are 2 ways to join this afternoon broadcast. The best way, go to mytradingiq.com, scroll down to where it says Afternoon Broadcast, click the link, complete the 30-second registration form, and you're done. Going forward, every trading day, you'll get an email about an hour before the broadcast starts. All you have to do at 12 noon Eastern, open the email, click the link in the email, and it will automatically log you into our platform. Now, you only have to do that process once, and by doing it that way, you have access to the question box, so you can ask questions and participate in the discussion. On the days you're out of the office, away from the desktop, or just don't have any questions, point your browser to our YouTube channel, youtube.com/CFRN. Easy to remember, youtube.com, you already got that, /CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, there are over 2,200 daily episodes archived for your educational and viewing pleasure. And for those of you that may be new to the world of CFRN, it's a great way to get to know who we really are. I mean, anybody can say anything today. But what were they saying 6 weeks ago, 6 months ago, a year ago, 2 years ago? So I certainly don't expect you to listen to every episode. But just scroll back, pick some days at random, and just listen in for a few minutes. You'll quickly discover there's a thread of connectivity, a thread of continuity woven through each and every daily live broadcast. So you'll find out not only who we are today, but you'll find out who we were 6 weeks ago, 6 months ago, a year ago, 2 years ago. youtube.com/CFRN. And while you're there, be sure to hit the follow button and ding that little bell so anytime we go live on YouTube, you'll be notified. All right, so with a word of prayer. Now, we spent the last week and a half talking about Easter. Okay, and we wrapped it up yesterday with our talk about the day after Easter. And so we're going to begin a different discussion. Now, this is a show about trading, right? But we're going to talk about a different type of trading. The question is, are you brave enough to believe? My suggestion is trade your doubts for brave faith. Matthew 4:23 through 25 from the Message translation has this to say. From there he went all over Galilee. He used synagogues for meeting places and taught people the truth of God. God's kingdom was his theme. That beginning right now, they were under God's government, a good government. He also healed people of their diseases and the bad effects of their bad lives. Word got around the entire Roman province of Syria. People brought anybody with a sickness, whether mental, emotional, or physical. Jesus healed them, one and all. More and more people came. The momentum gathering. Besides those from Galilee, crowds came from the 10 towns across the lake. Others up from Jerusalem and Judea. Still others from across the Jordan. We all crave the courage to stand firm in a culture rocked by upheaval. What do we do when doubt entices us to wonder if God is good when life is not? Perhaps you know Thomas for his bouts with doubt, but Jesus knew Thomas for the courage to question and the bravery to believe. Brave resilience isn't relegated only to a select group of spiritual giants or biblical heroes. It's offered to you and I as well. We first meet Thomas as one of the crowd in the early stages of Jesus' ministry. In the Sermon on the Mount, Jesus shared the Beatitudes, blessings for our lives. As Thomas heard Jesus teach, he began to gain the confidence to trust Jesus for more. Jesus called Thomas out of the crowd to answer his deep soul ache and use him greatly in the kingdom. It all started because Thomas chose to show up. Thomas became one of Jesus' disciples, ready to be taught by him. That's so true in all of life. One of the most important things is just showing up. Your ache for more can either drive you to Jesus or away from Jesus. When you allow it to lead you closer to Jesus, faith can overcome your fear. Or perhaps you're wondering where God is in your circumstances if he cares about what concerns you. Your life matters to God. Your hard questions are opportunities for him to reveal himself to you. In our ache for meaning and purpose in life, we can exhaust ourselves trying to find freedom. It's not enough to simply be a seeker of truth. We must go to the source of truth, just as Thomas did, Jesus. Although life may be uncertain, his character is unchanging. We can trade our doubts for confidence in his authority. It is possible to feel steady in the face of uncertainty and recover your peace when you feel overwhelmed. Disappointment can be the catalyst, not for spiritual apostasy, but for spiritual awakening. God transforms the ache of uncertainty into the ache for more of him. Question: what is one way you want to grow in brave faith as you study the life of Thomas? And that's what we're going to do over the next few days. Join me in a word of prayer. Heavenly Father, we come before you with hearts full of gratitude for the example of Jesus Christ, who walked among us to heal our bodies and souls. In Matthew 4:23, we read of how your Son traveled throughout Galilee, teaching in synagogues, proclaiming the good news of the kingdom, and healing every disease and sickness among the people. Father, we ask that you grant us the same kind of faith that the crowds had when they brought to Jesus all who were sick, those afflicted with various diseases and pains, demoniacs, epileptics, and paralytics. He cured them all. We pray that you may heal us from the illnesses that plague our bodies, minds, and spirits. May your healing power flow through us and restore us to wholeness, so that we may glorify your name through our renewed health and strength. We also pray today for those who are suffering from illness and disease, both known and unknown, and for their loved ones who care for them. Grant them peace, comfort, and hope in the knowledge that you are a God who heals and restores. Finally, God, we thank you today for your constant love and mercy, and for the ways in which you continue to work in our lives. May your name be praised now and forevermore. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. All right. Now, yesterday's episode was titled, Learning How to Trade is a Life Skill That Once You Learn It, Nobody Can Ever Take It Away from You. We spent time talking with Garrett, so we never really got into that topic, but we are going to talk about it a little bit today. But first, let me give you the numbers from around the world. We're going to start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is up 158 points. The NASDAQ is down 41. S&P 500 is up 6. The Russell 2000 up 13. So we have the dreaded divided markets. We like to see all four of the major indices in the red or in the green. Doesn't matter because we're futures traders, and we can be short and long and short again all in the same hour if that's what the chart in front of us tells us to do. And that's where we take our instruction, from the chart. not from a tip, not from some huckster on TV, but from the actual chart itself. Our strategy and our indicators are not designed to outsmart the market or beat the market. It's designed to help us see what the market is actually doing, because the market is always right. So if we can just do what the market is doing for a tiny period of time each day, we'll find that reaching our goal for the day, while it may never become easy, it can be simple. In the commodity basket, crude oil up $1.55, trading 81.28 last. That's a gain of almost 2%. Gold up $16.60, trading 20.20 last. That's $2,020.70. Make that 50 cents, which is a gain of almost 1%. Silver up 34 cents, trading 25.25 last. That's a gain of over 1.25%. Now I should remind you that when the price of silver moves $1, that's worth $5,000 per futures contract traded. When crude oil moves $1, that has a value of $1,000 per contract traded. When gold moves $1, well, that's $100 per contract traded. In the Asian markets at the close, Nikkei up 289 points, a little over 1%. Shanghai down almost 2 points. The Hang Seng up 154 points, 0.75%. And in the European markets at the close, FTSE up 44, the DAX up 57, the CAC up 65, which is almost 1% for the CAC. So we had a mixed day in Asia. It was a green day for the UK. And at the moment, it is a mixed Radio Tuesday here in the US of A, with 3 of the major indices in the green. The NASDAQ is in the red. Not by a lot. And the way the NASDAQ moves, that red could be replaced by green before I finish the next sentence. The NQ is extremely volatile. It's probably not the best market for a brand new trader to attempt to trade. So go with something a little slower, the S&P, the Dow, until you really understand the methodology, the strategy, the indicators, and the mechanics of putting on and taking off a trade. Because you got to be on top of your game with the NQ, and you got to be prepared to move quickly. Now, I said we had a topic yesterday that we never got around to, and so we're going to talk quickly about that. Trading is a life skill. Once you learn how to trade, you can trade anything. Now, some people will say that's not possible because, well, the S&P and gold and crude, they all have different personalities. I stopped arguing that point long ago. I'm not looking for a date or a life mate. I'm simply looking for a high probability, low risk trade opportunity, get my goal for the day, put the mouse away. So again, once you understand how to trade, once you know how to trade, you can trade anything, anytime, anywhere. And nobody can take that away from you. Trading is also a skill that can be applied to various aspects of life. Whether you're buying or selling stocks, currencies, or commodities, the fundamental principles of trading remain the same. Trading is about making informed decisions based upon available information and managing the risk. But beyond the financial realm, trading is a life skill that can be applied to any situation where we need to make decisions and manage risk. It can be applied to our personal lives, careers, and relationships. One of the key skills in trading is the ability to manage emotions. In trading, you have to learn to control your emotions and not let them cloud your judgment. The same principle applies in life. Whether it's dealing with difficult people, facing a personal challenge, or making a tough decision, managing emotions is essential. And it is, in fact, the thing that trips up so many new traders. Another important aspect of trading is risk management. In trading, you have to assess the risks involved and decide on an appropriate level of risk for your trades and for your investments. This is why in the live training room every day, Michael teaches you very aggressive risk management. And at the top of the hour, when we go live on the TradingView platform and trade for a half hour, you will see him show you exactly how aggressive his risk management is. In trading, again, you assess the risks and then you make a decision based on an appropriate level of risk for you. And that has to do with account size. But the same principle applies in life. We all face risks in our personal and professional lives, and it's essential to assess them and manage them appropriately. Trading also requires discipline and patience. Another thing that new traders often struggle with. You need to have the discipline to follow your trading plan and stick to your strategy. And you need to have the patience to wait for the right opportunities to arise. We have a tendency to want to just sit down at our desk, click the mouse a few times, make some money, and feel real good about ourselves. What we teach our members is we don't sit down to trade. We sit down to look for trading opportunities. And if an opportunity presents itself, then we will take that trade without hesitation, without jumping the gun. These skills are also essential in life. Discipline and patience can help you achieve your goals, whether it's a personal or professional one. Trading also involves continuous learning and adaptation. The market is constantly changing, and traders need to stay informed and adapt to new trends and developments. The same principle applies in life. We need to be open to learning new things and adapting to new situations. Trading is a life skill that once learned, no one can ever take away. Principles of trading can be applied to many aspects of life. Mastering these skills can help us make informed decisions, manage risk, and achieve our goals. By learning trading, we can develop a mindset that can help us succeed in all areas of our lives. All right. I hope I've conveyed to you the importance of learning how to trade, not just buying a set of indicators and a PDF and a virtual pat on the back, best wishes, but finding a teacher who will actually invest their time and energy in teaching you how to do the job. Imagine any career choice you might make. Whatever it is, you're going to need somebody to teach you how to do the job. Now, maybe you're a mechanic and you grew up with a mechanic father. And so from the time you were old enough to hold a wrench or fetch a tool for dad, someone was teaching you how to become a mechanic. But for most of us, that comes later in life when we begin to choose our career path, maybe in high school, deciding what kind of college we're going to go. We're going to go to medical school or we're going to go to law school. Where do we want to ultimately end up? So that's why 2 hours every trading day, we provide a live teacher putting on, taking off trades live in real time, explaining every move they make, every trade they take, and the rule behind it. You can watch all the videos in the world on YouTube. You read all the books ever written about trading. And while those are both fine things to do, they are no replacement for a living, breathing teacher. And our members benefit not only from 2 hours of live training every day, but also unlimited one-on-one private mentoring. The methodology and the strategy that we teach is fluid across all markets and all time frames. How's that possible? They got different personalities. The key is price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's a cycle that's been in place since the inception of the markets and will remain in place until the markets cease to exist. That's how markets work. You might wonder, why have I never heard that before? Well, because most people have a whole lot of things to sell you. Upsells, they're called. Continuing education, they're called. But with us, we have one thing. We have the passport. And that is unlimited access to everything we do, everything we've ever done, whatever we do in the future. To become a lifetime member with no recurring fees, no upsells, no nonsense, you can do it here at eminifuturestrading.com. If you have questions, call Valerie at 949-42-EMINI or send an email to support@cfrn.net. So that brings us to Logic 247, our 24/7 around-the-clock E-mini alert service. It's not just the E-minis, it also includes crude, gold, bonds, and the euro. Now, the CBOT didn't open Sunday night. I didn't get the weekly trading zones out to this morning as a result. And I even put this in the discussion group last night. I've always told you, you may not always like what I tell you, but I'll always tell you the truth. I said last night, be careful with the zones this week because of the CBOT, followed by Easter Monday, where the European markets were basically closed yesterday. Financial institutions were closed. So this is really our first day back, full stop, for the trading week. And then tomorrow, we have some important news in the afternoon. I'm not sure about what we have in the morning, but the minutes of the last Fed meeting will be published. And over the last couple of Fed meetings, we found that the Fed minutes can give us some pretty intense volatility. So we'll talk more about that tomorrow. Now, the logic alerts are based on current price action with time built in. To get the alert, study the 30-minute chart, see the window of opportunity that the alerts are based on. All alerts are based on the 30-minute chart. We're in week 245, and over those 245 weeks, we've issued over 13,800 individual handcrafted alerts. This week, as of 7 a.m. this morning when Valerie posted the recap, she will update it this afternoon, again this evening. But as of 7 a.m., we'd only issued 7 alerts for the week. We're still waiting on 1. So it left us with 6 actionable alerts, of which 1, or 17%, would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a simple 3-step process that we teach all of our passport holders in their unlimited one-on-one mentoring sessions. Over the last 245 weeks, we've averaged 20% or less of the alerts being stopped out. This week we're sitting at 17%, but we've had a lack of follow-through. So this number here is not attractive at all. But we'll continue to plug along and do exactly what we've done for the last 245 weeks. And I'm confident that number will change for the better as the week progresses. But it is an unusual week, so just be careful out there. Along with the logic alerts, we also have what we call our concierge trade alerts. That was our original alert service many years ago. Now, the CTAs are different. They're based on historic price action. They don't come out around the clock. They come out shortly after the Globex open each evening. Last night, Globex opened at 6 p.m. Eastern. This report was published at 6:10 p.m. Eastern. There's 2 numbers for each market, all the same markets we cover with logic. Now, what do you do with the numbers? When the report comes out, whatever market you trade or markets, go to the 30-minute chart, make note of where price is at this point in time. It's always going to be between these 2 numbers, or these 2 numbers, or these 2. Then draw a line in the sand at the long target, a line in the sand at the short target. Those serve as great visual cues to help you stay on the right side of the street. If the market is trending higher, it's not a good time to be selling. And if the market's trending lower, it's not a good idea to be buying. If price gets above the 30-minute BVC, it's trying to reach the long target. If price gets below the 30-minute BVC, it's attempting to reach the short target. It's that simple. You still have to look left to spot potential obstacles. And over time, you will learn how price behaves around the weekly trading zones. We've published the zones for our members since December 14th of 2009. And what has changed since we first published them is absolutely nothing. Now, this broadcast is open to the public, so if you're not a member or a trial member, you didn't get this report last night. If you want to grab a screenshot, go ahead. We'll jump to the daily chart, because Michael will be joining us here in just a few minutes to give us a recap of what happened in the live training room this morning. and then we'll trade live for 30 minutes on the TradingView platform. So let's pull this down and put this up. Daily chart of the S&P 500. You might say, I don't trade the S&P. That's okay. You might say, I don't trade the daily chart of the S&P. And that's okay too. However, the S&P is the bellwether. The other indices will ultimately go where the S&P goes. There is no one index that moves first, but ultimately they will follow the direction of the S&P 500, which is 500 large cap companies that have met the requirements of a huge list of qualifications over at Standard & Poor's. Now, we've got some interesting stuff going on. Bearish engulfing candle. Made a big deal out of that because we had proper context followed by a bearish engulfing candle. An uptrend, bearish engulfing. So what have we done over this holiday weekend and Easter Monday? Well, we've come back to test this trend line. Blue and climbing has gotten directly above price. However, blue and climbing is still below the high of that bearish engulfing candle. Now, I'm not saying that the market can't catch wings and take out that high and attempt this high, and this high, because it can. You have to embrace all possibilities. And we find ourselves today on the flip side of that trend line. Question is, do we stay there? And more importantly, when those Fed minutes come out tomorrow, how do they move the markets? Up, down, both? Yeah, probably. Quite often price ends up right back where it was before all the excitement started. So you know me, ever cautious, I'm going to recommend that you not trade that news when it comes out, when those minutes come out. Let the market digest the information. Let the market get back into its normal rhythm. Then you're ready to dance. It's important that you look at the daily chart of whatever market you trade for a couple minutes each day to see what the institutions are trying to do. Obviously, the institutions right now are trying to drive price higher. They watch daily, weekly, and monthly charts the way you and I watch 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size. Institutional traders have the benefit of accounts in the hundreds of millions and billions of dollars, while us retail traders typically have accounts denominated in thousands and tens of thousands of dollars. So by looking for just a few minutes, no matter what market you trade, what stock, what crypto, what Forex, spend 2 minutes looking at the daily chart, figure out which way the wind's blowing, and then you're ready to drop to your 30-minute chart. Now, there's a term down south called flat as a flitter. Not sure what a flitter is, but as you can see, price opened here. The vertical line separates today, Tuesday, from yesterday, Monday. We came out of the gate and just rolled sideways. Blue and climbing, turned to red and falling, and it eventually pushed us down to the BBC. BBC stands for bull bear cross. Price crosses above it, we're bullish. Price crosses below it, we're bearish. We anticipate lower prices. Now, I did in my missive last night in the discussion group, I said, guys, you know, the zones this week, and I outlined the reasons. let's just see how it goes. Well, when price rallies up to a zone, what do we expect? Resistance. When price drops to a zone, what do we expect? Support. Support, 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 support. Now we're back above the BBC, which means we anticipate higher prices. But at the moment, we're printing a red 30-minute candle. So where's the trade here? 41.46 to 41.48. That is your window of opportunity at the moment. Price is above the BBC, 41.46 to 41.48. We got blue and climbing coming up, but we're pulling back to the BBC. Now remember, the pullback holds more often than not. It held here. It didn't hold here. We know eventually it won't hold. Okay, that's what keeps markets fluid and tradable. But the pullback held, and it held, and it held, and it held until it didn't hold. So we've got to confirm that we truly do have support at the BBC. Then we have to take out the swing high of this candle, and right up here is our goal for the day from 46.48. If you've not already gotten you. Michael, if you're there, let me know. And you can grab the screens whenever you're ready. Just let me know you're here. All right, here's where the Dow opened last night. Ran up to the zone, found resistance. Pulled back to the BBC, the pullback held. Ran up to the zone again, and reached up to touch the target. Another pullback, another run, another pullback, another run, another pullback, another run. We only have one more weekly trading zone overhead for the Dow, and it's Tuesday. Now, my thoughts are that we could see a huge reversal this week to the downside. Not a forecast, just an observation. On the Russell, here's where we opened. Pull back to the BBC. Got a bounce. Pull back to the BBC. Both pullbacks held. This time we got blue and climbing. Takes us up to the zone. And we back off. Consolidation. And then we make the run to the target. Another pullback to the BBC. Another run to the target. And we're currently sitting on resistance at the trading zone 1803/1800. Is that you, Michael?
That is me.
Okay, why don't you go ahead, jump in, do your thing, and then the markets that I haven't covered yet, I will cover them after I finish.
Okay, let me
Sound
just
like
get
a deal?
my... Yeah, that sounds awesome. Let me get the live stream thing going on this one before it hits 1 o'clock and I can't get to it. Here we go. Open up this side. There we go. Shut that off right now. All right. I am ready to go.
All right.
There we go.
Looks good.
All right. All right. Here we go. Good afternoon, everyone. Today is Tuesday, the 11th day of April, 2023. Now, if you've not taken a free trial with us and you want to, go here to mytradingiq.com. And right here, all you have to do is click on this to sign up for your free 5-day training now, 9:30 to 11:30 Eastern Time. When you click that, you'll be sent all the information you need to get into the room in the morning. There'll be a password and a link. You should also go here to trading platforms and download your trading platform. Okay, so you're going to see us use GT Pro in here. That's what I do my trading on. And you're going to see the TradingView charting platform. Okay, TradingView is just a charting platform. It's not a brokerage. So if you download the don't download. If you sign up for the TradingView charts, you don't actually download them because they're browser-based. You sign up for the trading charts. Then you'll be able to do that anywhere you want, anywhere you have an internet connection. Okay, without doing a download. You should also take a look at the trade rules. These rules right here are the entry, exit, and risk management rules for TradingView. Now, if you have DT Pro or NinjaTrader, these are the entry rules for DT Pro or NinjaTrader. The management and exit rules are the same. Okay, but the entry rules are a little bit different for those different platforms. So check those out. That's if you're going to take the trial. So let's get into here now. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. And I'm sure Dwayne's already told you that today is kind of a flat day. We didn't have a lot going on today. But today is the 11th day of April 2023. We made 54 ticks in the NQ, 2 in crude, and we lost 10 in gold. Put us at plus 190 on the morning session. Today, if I could have quit after 3 minutes when I got my goal for the day, I would have. It took 3 minutes and 1 trade to get to $520. And we took a total of 10 trades altogether. So it was a really slow trading day. It's been slow trading since Friday. The whole holiday thing has thrown us off. Thursday was 13 trades. Yesterday was 13 trades. Today was just 10. I think when the news starts kicking in and everything starts going tomorrow, we'll be back up to normal number of trades probably. But anyway, on the month now, we're $2,977. That is over 6 trading days, averaging $496 per contract per 2-hour trading day. And we've gotten our goal on 67 out of 68 days this year, and we've gone 37 days since our last non-green day. We've gone 415 business days since our last red day, right? That's a long time. There was one December where we had gone almost all year without getting a red day. And I think it was like 5 years ago. We've gone almost all year without getting a red day, and in December we got like 6 of them. It was just a rough December that year. I mean, still ended up like $8,000 a contract after. But anyway, on the year now, we're up $35,130 with 1 contract. All right, that's 2 hours a day with 1 contract over 68 days, averaging $516 per contract per 2-hour trading day. If you were to quit trading when you get your goal for the day and you were to add 1 contract per month, so far this year you would have only had to work 15.71 hours, and you would have averaged $1,343 per hour. That's not to say you're going to sit down and make $1,343 an hour. But so far this month, we've only worked 48 minutes and we've made $4,090 with 4 contracts. Okay, so you can do that, $1,343 an hour. It's not a hard thing to do once you start adding up the contracts. Okay, like this morning, it took 3 minutes to get to 520. All right, so let's get into the actual trades. Again, not a lot of trades today. So we'll start out with the gold. We had 1 stop out on gold, and I believe that was our only trade. Yeah, it was our only trade on gold. It was right here, and we stopped out. It was right at the beginning of the morning session. We had just gotten our goal, and then we went to gold, and we lost 10 ticks there. Gold did keep moving. We're looking at the leg lengths here on the gold. This leg length began down here, got us up to there. Then this leg length went from here to here, got us up to there. And then we were looking for another leg length to exceed right here, and it didn't do it until all the way over here, right? But at that point, I wasn't really looking at gold anymore, and I didn't take that trade, and I didn't take that trade, and then it just got flat in here at the end of the session. There was 1 move, 1 kind of last breath here toward the end of the morning session, and it just whipped up and whipped right back down. Didn't give a trade setup. During the break, there was 1 bounce right here that would have ended up being a break-even trade, and I would not have done anything else even to now. I wouldn't have taken either one of those because we didn't put in a higher swing from that last one. All right. And that was gold. Not a lot happening. When we do go to the live stream, another reminder for you guys who are watching right now, we're going to go to the live stream here at 1 o'clock in just a few minutes. When we do go to the live stream, to get there, you go to Community, Live Streams. This is on TradingView.com. Go to Community, Live Streams. Let me say that slower. This is on TradingView.com. Go to Community, Live Streams, and we're going to be down until 1 o'clock. We'll be down here. If you look at the categories over here on the side, we'll be down here in upcoming streams. Right there. We'll be in upcoming streams. Okay. After 1 o'clock, once we start the stream, we'll be here in live trading. Okay, that's where we're going to be. Right, we'll be in live trading. You'll see us in there. It'll say live on top of it, like this guy's live right now. Okay, so that's how you get that stuff. That's going to start in a few minutes. Now, crude oil. We had today exactly 2 trades in crude that we actually took. One of them was way back here. We got 2 ticks in profit in that, but you can see how flat it was all through here. No trades all through there. I was waiting for a deeper pullback down to the ribbon, so we finally got one down here after the trend change right here. I didn't want to take either one of these. I wanted to wait for a deeper pullback. So we got the deeper pullback right there. We went into that trade and we took it long, and we only got a couple of ticks. We're expecting it to get up to here and even a little higher than there's what I was looking for. I believe it was 75. I did get up there. I didn't take this one, the follow-up trade. I did take this one once I put in a nice higher swing, and we're looking at the leg lengths in here as well and the pullback lengths. If you guys remember me saying all that stuff this morning when we ran out of time, I was saying I expected to pull back to here, maybe get a bounce. It pulled back to there, got a little bit of a bounce, but it ended up going down deeper. So there was no additional trading going on in here. Okay. During the break, not really anything to go on. There was one trade right here you could have taken, which would have been okay. If you took the arrow right there, you could have gotten it as well, but this was a ribbon trade that happened to bar earlier. I was going over that a little bit this morning and a little bit yesterday. If you get a trade off the ribbon, I don't even have the whole ribbon going right here. I have a piece of it missing. But if you get a trade off the ribbon, VB2, if you get a trade off the ribbon, long-term direction is right and the black is in the green. You don't have to wait for the slingshot to give you the leg up right there. You can go on this bar right here. You hit the ribbon, the black is in the green, you have a higher swing. You get in right here, you don't have to wait for this one. Right, so you get in a full bar earlier in that case. You can't do it over here because the black's not in the green. Okay. But right here, you could do it. But that was it. We ended up with just 2 ticks on crude. The ES we didn't trade all morning. And you can come and see right now. It gave a couple of trade looks. Not really. This was the whole morning session. I was using the ES to go take a look at the BBC so you could see how the BBC wasn't really giving you any trades. And in here, when I had the no trade zone on, I had it on while we were analyzing this right here. We're analyzing this right here where it did, was it right there? Yeah, it was right in here, I think. But I had my context was set to a different number, I believe, at the time. It's at 0.35 right now. But it had gone into a no trading zone. Oh, I think it was right in here. It had gone into a no trading zone. It was right here. So we ended up not taking a trade right here because it had gone into a no trading zone right here. That was during the training part this morning. Okay. We were waiting for this arrow. We were waiting for this down close right here to give us this arrow. And we're going through it bar by bar, like tick by tick, waiting for that down close. And then we realized we got into a no trade zone. So I canceled the trade. And it would have given enough to get the stop to break even, but it really didn't go anywhere. And we didn't have any trades here on the ES this morning. You can see the whole day is from right here to right here. The whole morning session is right here to right here. No trade zones all the way through almost. That was the ES. So we didn't have a lot going on today with the ES. I don't expect in the next half an hour when we start at 1 o'clock to 1:30, we're going to get a whole bunch either. But we could drop the NQ down to a smaller time frame and see if we get anything. But there's no reason to actually, look for trades that aren't producing right now. If you drop it to a smaller time frame, you expect less out of the trade. So I'm not desperate to trade, so I probably won't do that. But the NQ, let's go back to the beginning here on the NQ. And we'll see what we got going on. All right, this was our very first trade. Now in the pre-market, I was talking about this and how we had a bugle here and how we talked about this in the partners meeting last week and what happens within a bugle. How you might get into channel one way or a channel the other way. You can trade within the channel to get out of the bugle, and then you can start trading things normally. So fortunately for us, we had the bugle before the open. Then we had the channel create right at the open, and we're able to get out of it pretty quickly right here. We had to get down here to get out of it, and we did pretty quickly. So I took this trade right here. Now, one of the things that I've been saying to people is after the change of direction, like right here, where it changed from bullish to bearish, if that first trigger does not pull back deep, it's a really shallow pullback, you might want to skip that one and wait for the deeper pullback. And that's what we got right here. So I got this, and I took 26 ticks on that first trade. That's where we got the goal for the day. Now it changed directions again right here, so I skipped this one, and I think I got this one. but we went from 26 to 42, and then went from 42. This is okay. So this is the one right here. I didn't do this right here. I did this right here. I skipped that one and I took that one. So we went from 26 to 42, and then I guess we got 16 ticks there. Then we took this one and it stopped us out, and it ended up going down doing everything it should do, but we ended up stopping out on that for minus 20. That puts it back down to 22. Then we didn't trade for a little while, and we got in here and we got from 22 to 34. Then here we got 34 to 50. So that was 16 ticks. This was, I guess, 12 ticks, then 16 ticks. Then we went from 50 to 54. I only got 4 ticks on that move, and that might have been it. Now there were a bunch more trades, but none that I got into, it looks like. During the break, there was one arrow right here. Again, that was after a direction change, and so we had a deep pullback. You could have taken that. You could have taken this. This would have stopped you out, and either one of these would have gotten array back. Just not a lot of action today. I don't know what's going to happen now. You know, it's 12:59, so we're going to jump into the next thing right now. But if you have not taken a free trial with us and you want to, go here to mytradingiq.com. Right here it says sign up for your free 5-day training now, 9:30 to 11:30. Sign up for it there. All right, when you do that, download the trading platform or get access to the trading platform and set up a meeting with me, a one-on-one with me, and then we will get you all set up and going for the coming trial week. Okay. All right, so now I'm going to go back here, and I have to go over here. It is now 12:59, but if I bring this up on this side, I can hit connect on this and refresh, connect on that and refresh on this. And it is now 1 p.m., so I can show that off, turn this on, show this, show that, and all right. So we are now streaming live. Okay, so you see I left the no trade zones on here on the ES, just so you could see. I mean, we're not probably going to get, I don't know if we're going to get any trades here in this session, this 1:30 session, but we are streaming live right now. If anybody has any questions, you can go into that 1:30 session or in the one here in go to webinar right now. If you guys are in that one, you can ask questions in there too. Just type them into the question box. Okay, in the live stream, anybody that's in the live stream right now, if you want to type anything into the live chat there, you're welcome to do that as well. Anybody that wants to look at any symbols, if you have anything you want to look at that's not futures related, I'm happy to do that. The things that just triggered over here on gold, we got just a little bit higher swing. We pulled back, bounced off the ribbon, just a little bit higher swing. Over here on the NQ, we did put in a higher swing off of this arrow right here, so we're going to need a pullback over there. Change of direction just happened there. The ES, we're in a no trade zone. See that we're probably not going to get anything there. So I'm open. Anybody has anything they want me to look at, I'd be happy to look at it with you. Okay. All right. Again, for anybody who's out there who's not taking the free trial, if you want to take the free trial, then all you have to do is go to mytradingiq.com. Okay. Go to mytradingiq.com and sign up for it right there. Simple process. So while we wait for trades to set up, let me just go into this. If you do take the free trial with us, you should go here to mytradingiq.com and click on trade rules. This is how you set up the TradingView right here. TradingView TIQ context settings and rules. Watch this setup video. It's about 11 minutes long. Goes through setting up a bunch of different things in here. I'm going to change a couple of things on this probably today, maybe tonight. The lead wire is black. And the lead wire. Sorry, I have to do some wiring today. The lead line is actually black. It's not white. So I'm going to change that. But what I'm talking about in that case is down here in the slingshot. This is the lead. Okay. So what you want to have is that coming out of overbought, coming out of oversold, along with the long-term direction here, and the black line here is going to be in the right color. Okay. It's really a simple process, but that's what's going to print the arrow for you. See how it just came out of the oversold right here with the long-term direction being bullish and the black being in the green. So it's going to print the arrow saying you should, this is a good spot to go long. Now the highest probability trades are going to be when the arrow comes off the ribbon like this right here. Okay, like over here and here and here. When the arrow comes off the ribbon, those are going to be your highest probability trades. each trade, hey, morning, Martin. Hello, Zuff. Each trade should put in a higher swing. Okay, the markets always do the same thing, right? They're always going up and down and up and down. And right now, we expect it's going to go up and exceed that prior swing high. Because it didn't do it from this arrow right here, we're not going to look for another trade right now. Okay, you only want to go when the trend is actually trending. Like over here on gold, it went up, it came down, it went up, just barely came down, gave another long trade right here, but it went up and it did not exceed the prior swing high. So you don't want to take another trade here on the gold yet, right? You want to let it trend before you get into it, right? Give it some time. We're only 4 minutes into this session right now, the 1 to 1:30 session. So hopefully we'll get something, but I'm not real optimistic. We haven't had a lot of opportunity today. Okay. If anybody has any questions. I'd be happy to answer them. Anybody? I don't see anything coming in, so I'm just anybody wants me to look at any symbols, I'd be happy to do that. We did not put in a higher swing here, so I'm not interested in this right now. Okay. Did not put in a higher swing, so I'm not interested in that over there. And we didn't do it here. We did do it a little bit here, so we could get a trade here on the crude, but you can tell the crude is really not trending. Okay, if you look at this, it's really not trending. It's selling off of this area right here every time. So I'm not going to do the crude. The ES is in a no trade zone. The NQ, if it goes up above this level right here, then I would be interested in it. But the way that it worked out, there was a trade here that would have worked out. There was a trade here that would have been break even, did not put in a higher swing. So then I would have skipped this one, waiting for the higher swing to happen. Okay. Right. We have too many people logged into this. Let's see what it's like. All right.
CJ requested BTC, and I'm logged in from
Bitcoin.
a different account. So
Okay. Yeah, I don't know what it is. Maybe it's that I'm logged in here and here and over here. It could be me. Probably is. I could log this one in on a different account every day, I suppose. All right, so you want to see Bitcoin. Let's do Bitcoin on something that's not going to give us a trade. The ES isn't giving us any trades. Let's do Bitcoin on that one. Bitcoin. Now that is a crypto. And we'll look at it on the Coinbase one, I guess. And we are not going to be able to look at that on the 7-tick range. Let's blow this up a little bit, and we'll put it on 100 range. Or actually, 500 range. Okay, so Bitcoin is much like everything else. There is no action at all. Not even since yesterday, right? Oh, wait, maybe this is all today. Okay, so let's look on a bigger range than 500. Let's get rid of some of these bars. Look at it on 1,000 range. Okay, so this is a little better. It's a little more tradable. You can see right here, it's gone all flat. The long-term direction has gone flat, so I wouldn't do anything with it right now. But all these arrows that you got triggered earlier when long-term direction was bearish, that'll look pretty good in here. Long-term direction is bearish over here. Everything was looking pretty good. So Bitcoin, I really have, hang on, let me shut that one off. Okay, I'm logging myself out, it seems like every time I switch.
the fact that Bitcoin has broken 30,000, that if that can become the line in the sand, if that can become support, then things are looking good.
Let's look at it on a daily chart, okay? Because we broke the 30,000 today, and I would say when it pulls back to support, it's going to be down here at like 28,000.
Yeah.
We'll see when it bounces from there. We'll see, but that's what it's looking like right here. You see all this that it broke out of right here. This is This could be a head fake to the upside. I doubt that it is, but it could be a head fake to the upside. We do have some big, some high impact news coming out. So I would think that right now, this is the channel that it's been in from here to here on a daily. From here to here, it's been the channel. And we've broken out of the channel on the upside. I want it to be good, but I think it's going to pull right back down into here. Maybe it ends up being support here if it breaks up above and stays up above. I don't know. Are there any big gaps down here it's going to fill? I don't see any big gaps. So this is a daily chart, so you wouldn't really have them on a daily chart. But let's go on to 30-minute chart. No, I mean the market's got to close to get gaps. So we really don't have any gaps. It doesn't have to close, but a market that closes and reopens is one. It's more likely to have gaps. But I don't know. That's on Bitcoin. That's what I see. So what's my take on the markets today? The markets today, because we have zero news that's going to move the markets today. It's really tough trading. There's just not a lot of trade opportunities out there today, is my opinion. So yesterday was the same thing. Today in the morning session, we made 54 ticks on the NQ. We lost 10 on gold and made 2 on the crude in the morning session. So that was 2 hours of trading. And I only had 10 trades in the morning session. And I normally have a lot more than that. So I would say today, wait till tomorrow. That's my take on trading today. You can break down like what I said a few minutes ago. Put the Bitcoin back to the ES on the 7 range. Before I forget, you can take anything. You can take anything. Like let's just look at the ES for instance. No, I don't really want to look at the ES. Let's look at the crude oil for instance. It was on the 7 range right here, and it's it's trending up, just grinding slowly up. The crude oil has been all day on a 7 range, but if you break that down to a 4 tick range, then like right here, there was a gap right here. I don't know what that gap was all about. But on a tick range, you have some decent movement up and down, up and down, up and down, up and down. Whereas within the 7 tick range, you'd have half as many bars, and you wouldn't get this movement. It's like right here, you'd have a trade. Let me check the context on this because it's 0.02. That's right for crude. Okay. So like right in here, you had a trade right there. You had a trade right there. I was looking for the arrows. I don't know why the arrows aren't showing on this right now. It should be shown, but you probably had a trade right there because you came out of the oversold and everything was bullish at long-term direction. So everything should have been good right there. And direction in here, you would have had a trade right here. You would have had an arrow right here. If I had the settings right. I don't know why they have some there, but so yeah, there's a lot of high impact news tomorrow. So tomorrow should be a little more exciting anyway. Now, what I was saying earlier is you can always go down if you're really desperate to trade. You can always go down to a smaller time frame and find trades which you expect less out of the trade. You expect to go to the prior swing high, but that prior swing high is going to be closer than it used to be. Okay, with a long frame, so you're expecting less out of it. You're expecting the same type of thing structurally. As far as the markets go, you're expecting you to get a bounce off the ribbon and get up to the prior swing high and continue the trend. But just dollars wise, that prior swing high is going to be closer because you're on a smaller time frame. Like in here on the 7 tick range, we didn't even get that trade set up that it just showed in there on the 4 tick range. So that's my take on the markets right now. I don't know that that's going to change as we go through the day here. I don't know that anything's going to happen, but tomorrow should be much more volatile. We should have many more trades tomorrow, I would think. Okay, take any trade that sets up. Like you're on the ES right now, it's almost setting up a trade. We've got a little bit higher swing. If it pulls back and gets this into the oversold or it gets into the ribbon, then we'll start looking for a trade. Now the crude oil has got down into the ribbon here and this is oversold, but it's not trending, so I'm not going to do anything with that. The gold didn't put in a higher swing right here and just drop all the way through the ribbon. So it looks like it's going to try to turn around on us. So I just don't know what to do here, but Euro USD, sure. Let's look at that. I'm not going to look at it on the ES because ES might actually give us a trade. But I'll look at it over here on crude. Okay, that is EUR. Let's go to Forex. Oops, I spelled that wrong. That wasn't even close to EUR. EUR USD. Here it is. Okay, so this is on a 7 range. I'm going to switch out from a 7 range because, well, let me show you what I mean. Let me watch the ES here too. I'm gonna bump this over like this so we can see a little bit more of it. And in here, I'm gonna put the no trade zone on. Okay, I want to show you how you can adjust this no trade zone so it makes more sense. See, there is nothing in here the way it is set right now that is going to allow you to trade. You see all that there? So to find some level that it's going to allow you to trade at, look at the decimal places here, and you got to go in here and make your adjustment in here. Okay, it'd be like 0.0005. Let's try that. See what the no trade zone does. Okay, so the no trade zone didn't change at all. So let's add another 0 on that. There it is. Now your no trade zone is a little better. Okay, so we're not going to do Forex on a 7 tick range because the spread is probably bigger than 7 ticks on a Forex. So let's go to a little bit bigger range than that. Okay, we'll go to like a 20 range. Okay, on the Forex. And now we'll have to go back here and go down here. We have the right number of zeros. Okay, we'll go in here. I don't know that I saved it with the no trade zone on. I did. Okay, that's good. All right, so in here with the Euro, USD, right in here is where you'd be looking to short. Right there, right there, right there, up here. Right here, you would have stopped out on that. Could have picked it right back up there. This is what the Forex looks like on the Euro. The ES is not giving us a trade yet. It's almost there. It's almost there. So get ready for that. It could possibly give us a trade. This bar has got a low of 41.25, so you have a high of 43.25. I'm not really sure the ES wants to go up. It does. I think it wants to go up, yeah. We're going to need enough close on this bar, and this is going to pull out of the oversold right here for that to happen. Okay, but this is what the Euro USD looks like. You wanted to look at that. So is there anything else you want to look at? No, I don't know if it's been decent all day, or if this is just a fluke. And this is looking at this on a 20 tick range. That means every bar is 20 ticks high. Okay, every bar is 20 ticks high. So we want this to give us an up close, one more tick higher than what it is, right? It's got a low here, 41.25, so 43 is where that bar is going to close on the top. If that happens to bring this out of the oversold, then you would have a trade opportunity there. Okay. So, I mean, we could even adjust this no trade zone, but it seems like it's pretty much spot on. You want the no trade zone where it's changing directions like this, where it's flat and changing directions, or just flat. That's what you want the no trade zone to be. Okay, so it's doing a pretty good job of it with that number that we just put together. XAU USD. Yes, I can. XAU slash USD. Okay. Yeah, I know. I get that connection, disconnection thing going on again. Okay, well, as long as it's still running, the live thing is still running. You don't have to be connected on that other side. So XAU USD, I was going here. Let me hit XAU. All right, I think the ES just closed up. Let's go to all. XAU USD, here it is. Which one of these do you want to look at? It's Forex, it's gold. Yeah, but which one in gold? Which one of those did you want to look at? XAU. It did. Yes, it triggered me in. Here it is. I do order waiting. So XAU USD, let's do this one. Okay. And so let's just check and see if we still have the no trade zone on here. think we do. Yeah, we do. Okay. So, but the no trade zone is not going to be any help at all if we have this set to too many. It's going to just disqualify everything. So let's just get rid of a bunch of those and see what it says now. Okay, so now that's too conservative. There, that looks about right. Well, I mean, you still got to check and see how sensitive it is, how conservative it is, but it looks pretty good. So this is what XAU USD looks like. It gave a short right in here, it gave a short, it's back here, there, and there. It's not going to be one right now. It's not quite there right now for a short. Okay. But that is what you would look at right there. So, you know, a while back it gave a bunch of shorts. A while back. Okay. The ES, I don't know if it went 4 ticks into profit. It looks like it did go 4 ticks into profit from the entry point. Well, not my entry point. Okay. My entry point was at 0.25. It only went up to 3 ticks in profit. So every trade starts out with 10 ticks of risk on a 7-tick range chart. Every trade starts out with 10 ticks of risk. Right? The NQ over here is a 16-tick range, so that starts out with 20 ticks of risk. And all this stuff is spelled out for you in here. If you go to mytradingiq.com, click on trade rules. That's right here in the risk management section. Okay, it's all right here in the risk management section, the different time frames. Okay. So that's that, and that's that. And so where should this go? All right. So step number 1 is entering the trade properly, right? There's 3 steps to a trade. Step number 1 is entering the trade properly. Step number 2 is getting the risk management right. Okay, if I click on this, now we're 3 ticks in profit right there. It needs to go 1 more to bump the stop to break even. Right. So these are the steps, right? Trade rules. The entry, which we've done exactly right. The risk management, which we've done so far exactly right. The stop is 10 ticks away. That's exactly what we wanted. Now the stop goes to break even after we get 4 ticks in profit. It hasn't gotten 4 ticks in profit yet, so I haven't had to manage the risk yet. Okay. So, and then the next thing will be the exit. But we gotta get the risk off the trade before we worry about the exit right now. Okay. So we're back here to getting the risk off the trade. And what we anticipate is it's gonna get all the way up here at 41.47. There, 41.47. Now that's part of the managing the exit, right? We don't have to worry about that right now because we still have risk on the trade. Once we get the risk off the trade, that means our stop is not a break even. It's not a break even, by the way. Once we get the risk off the trade, then we can start worrying about the exit. We don't have to worry about that right now. Okay, one thing at a time. Get the entry right, get the risk management right, then get the exit right. Okay. So right here, you can see on the gold spot, we're going flat right there. Long-term direction is flat. So you're not going to have any more short trades or long trades right here. You're just going to have to wait a few minutes. Okay. There were some nice trades right in here if you were in it at that point, but there's nothing going on right now. Right. What is the NQ doing right here? The NQ looks like it's pulling back against a larger uptrend. Did not put in a lower swing right here, so it does not look like it's continuing this move down. It looks like it's going to continue up right here. All right, if it pushes up and gets up above right here right now, that would be good for the CS trade. Then I think all the indices are probably going to move up. See, we're not going to take a trade here right now because this last one right here should put in a lower swing. That should put in a lower swing. And going back to that thing that I pointed out at the beginning, right here, you know, the black was in the red right there. We came and hit the ribbon, the black was in the red. You didn't have to wait for the arrow on this one. All right, you could have gotten a down close right here. You didn't have to wait for that arrow to trigger. Okay, it was a valid trade coming off the ribbon right there, even without the arrow. As long as the black's in the red, the long-term direction is bearish, then you don't need the slingshot. Okay, getting the slingshot is just a bonus, but you would have gotten in way down here instead of way up here. So that would have been a break-even trade for you instead of some kind of profit. You probably gotten 10, 12 ticks out of that. All right, so over here, our long-term direction is still flat. All right, this arrow is looking back right over here. That's why it's not thinking the long-term direction is flat. I think it's still not right. The sensitivity is still not set right for this. We'd have to work on that to get it exactly right. But if this does move up and it gets up to, well, it's going to exceed this level right here. And then I would look for it to get up beyond that level, looking left, right here, then right there, then even further. It would really change the direction here, the long-term direction, if that happened. Okay, it's 123, and so far we've won one trade, and it hasn't done anything yet. It's just the kind of day it's been. You asked earlier, Zuf, right? All right, so we're waiting right here. Now we've got a second arrow, and we did get up to the swing high. That's good. Now we want to exceed the swing high, so we can look for another opportunity on the long side. That's what we're looking for. The NQ is doing what we wanted it to do over here, that ES trade for us. All right, we want to see that continue up, and the NQ should actually go all the way up here. Now that would kind of make it a direction change or just totally flat here on the NQ. Either way, we didn't want to do anything with what was going on there. Okay. So we're still in this ES trade, and the ES trade should get up here, right, to 41.47. But I think, well, we'll see what the DOM gives us after that. But 41.47 is looking like a pretty good number there. Gold is setting up for a short right now. You see over here, bear separation in the long-term direction. The ribbon spread wide open. We're up here in the overbought. We pull back up. We're not in the ribbon yet, but it's potentially a short trade there on gold. If we were to get a down close right now on gold and it pulls this out of the overbought, then we would sell the gold. Okay. So let me bring that over and we can look at that. Analyze this at the same time. Okay, watch the ES for 4 ticks in profit. We're going to bump the stop to break even. So gold's got a high here of 18.8. So we're going to sell 18.0 on the gold. That is 8 ticks from the bottom of the bar. That means the bar is going to close right here at 18.1. And it's going to enter me short right there. Oh, wow, I still have 4 contracts on gold. Oh, well, let it go. Still waiting for this ES to do something. The NQ didn't end up finishing up as much as I thought it was going to. So it is now 11. It's 125. We could end up finishing the session out with no complete trades at all.
The ES has a weekly zone overhead at 41.48.
Okay, well, that's great. That is a great target. The way the weekly trading zones, I can't show them to you right now, but the weekly trading zones, they're delivered usually every Monday morning at 6:15 a.m. And on non-holiday weeks, they're delivered at Monday morning at 6:15 a.m. And they're like magnets. So it's great that there's one right here that should pull the price back up to it. It has been hovering around that zone pretty much all morning. That weekly trading zone has been in and out of it all morning. That's why we haven't traded the ES at all until right now. This is our first ES trade today. And you can see it's getting, well, so far 20 minutes. And I feel like it's going to run up to 41.47 anyway, right there. It's a great target number. And it matches up with the prior swing high. So we need one more tick to bump that stop to break even. Come on, get up there. I thought it ticked on it, didn't it? Maybe it didn't. It's just going to go up to this one right here. It's getting there. There it is. Okay, so now we can bump the stop to break even. Okay. Now, the NQ is doing what I wanted to do now, and the gold is not doing what I thought it was going to do. The ES should do what I wanted to do. Okay. Now, the markets don't do anything that I want. They do what they want. It just happens to coincide with what I want. But 18.9 down to 18.1 over here on the gold now. Let's sell. Okay. So sliding this over, looking at the gold, we did get, you know, all those numbers that let me look at this. I want to look at this on a little bit bigger here, but I really need all these other markets too. Let me slide the gold over just a little bit like this. Okay, so when I was looking left, you know, one of the levels was right here at 339, and the next level was right here at 417. Okay, so from this entry back here, we've gotten up to 349 so far. Here's another entry right now. This has no reason it shouldn't get up above this swing high right now. You should anticipate that that's going to make it above the swing high, like this last one down here did, right? Above the swing high, continuing the trend. Remember, the markets are always doing the same thing. I'm locking one tick on the ES right now. So at the end of the session here, because we only have a minute and a half left, but the markets are always doing the same thing, right? They're going up and down and up and down and up and down and up. Should exceed that swing high, which it's doing right now. So what you want to do is learn how to get in down here and get out up here, get in down here and get out up here, get in down here and get out up here. All right, and that's what we're teaching you how to do. Okay. If you have not taken a free trial with us, then you should go to, hang on, copy, let me paste this in here. Go there. I mean, you're just getting a little taste of it right here. But we do this for 2 hours every single day, every morning, every business day. We do this from 9:30 to 11:30 Eastern time every single business day. Lock in one more tick on the CS trade. It's about ready to break, I think. It should get all the way up here to 41.47. I don't really see any, and I guess it could go all the way up there to 41.48. 41.48 is the weekly trading zone, so there's a couple of reasons why it should get up there to 41.48. The gold over here went higher, so now it's 19.2. Subtract 8 from that. You're going to be here at 18.4 is where we're going to sell over there. Now the NQ just about got up to where I wanted to get up to here. It didn't actually change it to a long-term trend of bullish yet, but it's almost there. If it runs up just a little bit higher than that, then that's what we'll be looking for. Okay, back over here on the gold right now, we've got a high here of 19.2 still, so that's the right spot to sell. And I'm going to lock in a little bit more over here on the CES. I'm going to lock in 4 tick now. And it's working its way up like we wanted it to. All right, 6 ticks now. The spot gold here that you want to see is working its way up too. And I would think that that's probably going to keep going the next level up on that. I'm gonna, it's 1:30, so I can just lock in 8 ticks on the CS right now and just take $100 profit on the mornings. I'm on this half an hour session, be happy with it. But the NQ, you can see that's still working its way up. And I do think this is going to go up higher than right now. There it goes. So I'm just going to lock in 8 right now, and I'm flat with 8. Okay, so we had the one trade there in this session. It's now time to wrap up this session. While I'm not going to take this gold trade now, I'm going to slide this over here. I want to look at this one more time to give you another look at where this should go. Okay, so all these levels here, it's hit now. Every one of those levels that I gave to you, it's hit. I would think it's still going to keep going right now. What I would think about if you got into this, now this is kind of hideous the way that they do it. When I do my fib stuff, I do it with DT Pro because it doesn't have all these crazy colors. But this is a 50% retracement right here. Okay, and this is a 61.8% retracement. Now, if you flip these around and do it the other way, it'd be a 61.8% retracement right here. If it's going to do 100% retracement, it's going to make it all the way up here. And at this point, there's no reason to think it won't. I don't know why it's changing directions as strong right here as it has, but it's gone through the 50% retracement. So now the real question is that going to hold the midpoint? Right? That's a really significant point all the time when it comes to fibs. Especially with what we do. When we have the weekly trading zones, we have the midpoints in between the weekly trading zones, and if they coincide with other things, like a 50% retracement on a fib, that is just awesome. It's great support for resistance. So we had the one trade here today for 8 ticks on the ES. That's more than I had all morning on the ES, so I'm happy with that. All right. So I guess we're going to have to wrap up with that today, guys. It is now 1:30. If you have not taken a free trial with us, again, go to mytradingiq.com, sign up for the free trial there. If you go to mytradingiq.com, sign up for the free trial, you should go here to trading platforms. And right here, there's the instructions. You need to download the TradingView trading platform right here. Watch this video, download the TradingView platform. Go to trade rules. This says how to set it all up. And this right here, if you click on that, let me hit save right now. If you click on that right now, you will get a copy of this right here as this is right now. right? I'm going to change this back to crude oil, but you'll get the one with the gold spot if you hit that right now. Okay, this is K crude. We're going to go to May crude, right? And we want that on a 7 range. Okay, we didn't end up with any trade there on the crude. That was really messy in crude. I got to change this context back to 0.02 for crude oil. Okay, 0.02 for crude oil. You see the no trade zone is going to change. And that's it. All right, everyone, that is it for now. We're going to wrap this up on the live stream. If anybody has any questions, you can email support@cfrn.net or support@mytradingiq.com. Either one of those, I can type both of those in. Any questions? I think I can email those in. Type. Okay. Oh, I got moderation. I can't type that one in. Okay, well, any questions, you can email support@cfrn.net or support@mytradingiq.com. And yeah, so I can type in what we finished with for the day. We finished with 1 ES trade plus 8 or plus $100. Okay, that's it, guys. With that, I'm going to wrap it up for the live stream right now. I'll pass it back out to fabulous Phoenix, Arizona, and Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready, the stream has ended. Okay, your mic is, okay, there you go. I was going to say your mic's not on.
I'm here.
Okay. There we go. There's that. We'll do it again over here.
Here we go. All right, recap of the morning session.
Morning. Today it took 3 minutes and 1 trade to get to $520.
Great job.
Thank you.
All right, guys, real quick here before we go to our good word for the day. Let's pick up where we left off on the Russell. Okay. Russell, okay, we opened here, pulled back to the BBC, the pullback holds more often than not, holds again, and we hit the target 1, 2, 3 times, and where do we find resistance? At the zone. On the NQ, here's where we opened last night. We pulled back to the BBC, the pullback held, we consolidated at the zone, which is what will happen 70% of the time. 20% of the time you'll get rejection, and about 10% of the time you'll get what we call the slice. Now, we ran up and found resistance at the zone. See, as we were coming up here, we found resistance yesterday at the zone. And then when the session opened last night, resistance at the zone. Finally overcame the zone, made it to the next zone, and we found resistance. So now we come back down, this time the pullback doesn't hold, and we know that's going to happen. That's what keeps the markets fluid. Look where we find support at the zone. That support bounces us up to the BBC. The pullback holds more often than not, whether you're pulling back from above or pulling back from below. The fact that we're below the BBC and we have red and falling, bang, that takes us right down to the target, which then takes us down to the zone where we find support, consolidate for hours. Now we're pulling back to the BBC. And when price reaches the BBC on the 30-minute chart, what do we anticipate? Another leg to the downside. Now, Notice this step line, the black line. It's tracking with red and falling. It's tracking, it's tracking, it's tracking. And then it crosses. When that step line crosses red and falling, anticipate a pull back to the BBC. Over here, markets were moving higher until when the step line crossed blue and climbing. And what did we get? A pullback to the BBC. Over and over, again and again. Crude oil. Crude oil had a big day today. Here's where we opened last night, right at the zone, ran up to the zone, found resistance. Look at how many hours we consolidated. These are 30-minute candles. Okay? Remember, 70% of the time, when price hits a zone, it's going to consolidate. Then blue and climbing turned to red and falling. We got below the BBC, and we dropped through the zone to touch the target. When price slices through a zone like it's not even there on the 30-minute chart, it will typically retrace to the zone it sliced through, continue in the direction of the slice, which took us back to the target a second time. Now we've gotten above the BBC. We've hit the long target. We struggled a little bit here at yesterday's high. Consolidated. Now we're making a run at the zone overhead. But notice that the step line is also attempting a cross. Okay, there may still be enough energy here to get us to the zone before that cross truly crosses, like you saw on the other charts. Okay. So 81.55 to 81.65, that's enough to be your goal for the day. On gold, you'll notice all these markets are kind of, for the most part, sideways. We opened here last night. Price comes down to the zone, finds support, and then runs up to the target, hits the zone, consolidates, attempts the next target, but it didn't get there. And if you look left, you'll see why. There was a huge gap lower open here, and this filled the gap. And once the gap filled, we pulled back to the BBC. I'm sorry, to the weekly trading zone and the BBC, both of which we expect to provide good support. And this resistance created by this became this, and now we're above the BBC, but we need to overcome these highs. So something like 2024 to 2026, that would be $200 per contract traded. Silver. Silver opened last night right at the zone, found support at the BBC, made a run enough to get your goal for the day. Little pullback, hits the target, pulls back to the BBC, the pullback holds, hits the target again. We get below the BBC, we get red and falling, and we find support at the zone. We then get back above the BBC, and we find resistance at the zone. I hope you see the recurring theme here. What do we got left? Euro? Okay. Euro. Here's the open last night. We get above the BBC. We've got blue and climbing. We run up. First, we consolidate at this zone. We run to this zone and get rejected. Then we manage to get through it. Pull back to the BBC. The pullback holds. And bang, we hit the target. Pull back. Target again. And we overcome the target. Find resistance at the zone. Okay. And now we've pulled back to the BBC. We got red and falling overhead. So price is trapped right now. You got resistance overhead and support below at the BBC. And if we trade lower, this low right here is potential support, which means you would want to look at an entry around 109,360 down to 109,300. Okay. And that window of opportunity I drew in earlier in the broadcast, I only made it to 41.47. So we made it halfway through the window. And we pull back, and we're going to make another run at it. So based on your risk tolerance, your risk management, you may have gotten stopped out, you may have taken your point, or you may be ready to rock and roll again. Because we're just about to get a bullish cross. The daily, we are green and above the trend line. Okay, resistance, potential resistance at blue and climbing. If we get above this swing high of this bearish cross, okay, and that's an important signal in the proper context. You like to see a much bigger candle, but it is what it is. We got to trade what's in front of us. Market looks like it wants to go higher, but it's going to find potential resistance right now at 4161.94. And then the high of the bearish engulfing candle was 4171.75. If we take out that high, hold it on a pullback, then the next potential resistance is here, and then the February 2nd high. Okay, we've been in a downtrend over a year. Low of the downtrend was put in October 13th of last year. Right here. Leg, retrace, leg, retrace, leg. That's how markets work. Doesn't matter which direction they're moving. Leg, retrace, leg, deep retracement. Okay. So how we close today and how the markets digest the Fed minutes will either take us to that February 2nd high potentially over a period of a few days, or send us down to the BBC, through the BBC, and then the major support we would expect would be right here where this bullish cross took place. When you have a bearish cross that leads to an extended move, the first time price revisits the area of the cross, it will almost always be good resistance. So our bullish cross took place right here. And so if price comes down and gets through the BBC, watch this area. Now, you all know how to take the trial. Many of you have already taken the trial. If you're ready to get real with the deal and become a member of the family, lifetime membership, no upsells, no nonsense. Passport is your lifetime access to everything we do, everything we've done, and whatever we do in the future. Which means whatever we do in the future, you won't pay another dime because you are a passport holder. And as a passport holder, not only do you get 2 hours of live training every trading day, you have access to unlimited one-on-one private mentoring, the strategy, methodology that we teach you, indicators that you own for life are fluid across all markets and all time frames. As a passport holder, you'll also receive the Logic 247 alerts around the clock. You'll receive the Concierge Trade Alert report every evening when it's published. You'll be invited to the members only workshop, of course, on Thursday night. It really is everything a trader needs, all under one roof, one low price, and around the clock support via Telegram. Let's wrap it up with our good word for the day. Are you having a nighttime experience? Psalm 134. Bless the Lord, all you who by night stand in the house of the Lord. God divided time into days and nights. So you're going to have daytime experiences and nighttime experiences. For example, you can have a nighttime experience in a divorce court, in bankruptcy proceedings, in an unemployment line, or at a graveside. And because you can't see clearly at night, it's easy to wonder, God is really there with you. Take heart. He is. With Pharaoh's armies behind them and the Red Sea in front of them, the Israelites faced their greatest challenge. The Bible says in Exodus 14:21, all that night the Lord drove the sea back. Be encouraged. God is at work even when you can't see him. Hymnist George Matheson wrote, will I remain in God's house at night, love him for who he is, desire not the gift, but the giver. When I can remain during the darkness of night and worship, I've accepted him for himself alone. In this day and time, we too often find ourselves worshiping the creation and not the creator. If that's going on in your life, you need to correct it. And only you can correct it. No one can do it for you. Word of encouragement. Don't just turn to God when you need a miracle. Instead, focus on your relationship with him, and you'll get a miracle. You need one. Jesus said in John 15:7, if you abide in me and my words abide in you, you will ask what you desire, and it shall be done for you. Keeping in mind that our time frame and God's time frame are not the same. And there's even a country western song, one of God's greatest gifts is unanswered prayers, which is why we always pray the will of the Father in our life. And then be patient. Just like trading. After losing everything near and dear to him, Job's friend Elihu said to him, where is God my maker, who gives songs in the night, who teaches us and makes us wiser? Jesus said in Matthew 10:27, what I tell you in the dark, speak it in the daylight. Be encouraged, friend. It's in your nighttime experiences that the Lord stabilizes, supports, and strengthens you to go on to victory. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.